That's Deirdre Bosa. Now to our panel. CNBC contributor, Trivariate's Adam Parker. CIBC Capital Markets' Chris Harvey. Strategis' Chris Ferrone. Everybody, as you see, is here at Post 9. So I'll just come out to you first. You're sitting right here. Is the SpaceX sell-off in any way concerning? Is it emblematic of something? What do you think's going on there? And the mega cap, the other mega caps, because it's now a mega cap, are kind of uneasy also.
Yeah, I don't know. It's very hard for me to use historical data and have any confidence about what a sell-off in SpaceX means. I think it's just digesting the IPO and all the allocations that went to it and people making profits off the initial, a price action. I think the bigger issue is maybe the Google talent departure and some thoughts about sustainability. Look,
that stock's down 6%, by the way. You don't see these kind of moves all that often, right? They're 6% for an Alphabet's it's a decent
lot.
Move, $20.
It's a lot, and especially when you add the market cap, factor. But I think when if I tell you what institutional investors, what stock they like the most in the grade 8, it probably was Google. Coming in, I think it was probably the most popular one to own. I think most people would say, well, I get NVIDIA's well positioned and it's cheap. Google seems like they win no matter what. So I think those two were certainly the ones I hear the most, and the most retail names, the least institution, were probably Apple and Tesla. So when you get negative news on Google, I get it. It probably, people getting a little more nervous.
What do you think? I mean, was the SpaceX IPO and the pop off the IPO and the difficulty, if not inability, to really value the company, was that a sign of something like a peak of speculative reach that's now coming back to earth a little bit, or is it all about much ado about nothing? It's just an IPO that's just coming back to earth a little bit.
I think it's a little bit more of the latter, right? It performed well. People made money on it. They're taking profits. We have a little bit of choppy market. Last week, worst comes in, and it comes in pretty hot. That unsettles the market. And so stocks trade, and that's what's happening, right? If you look at the IPO market, if you look at tech, what's working is momentum. And we are still in a momentum market. And if you don't have positive price momentum, then it's very difficult.
What do you think?
I think this is such a rotational tape. I mean, think about the last 2 or 3 weeks. Eco-weight S&P made new highs last week. Russell 2 is making new highs today. Mm-hmm. Only one of the Mag 7 has made a new high in June, and it's the stock none of us has mentioned. It's Apple. The other $1 trillion stock making new highs right now that gets no attention is Lilly. So as money has come out of the Mag 7, you've seen it go into healthcare. So I think the question we're all trying to ask ourselves is, when you see these big tech sell-offs or Mag 7 down, is money leaving the asset class, or is it finding some other place to slosh around? I think it's the latter. I think this rotational tape is evidence in the banks, all the banks breaking out here again.
Yeah,
I think it's evidence,
as we showed at the top,
in the healthcare sector. So I take some comfort that money doesn't want to leave the asset class.
I mean, the Russell is, we'll talk about it more in a minute, it's like the greatest market story that's never told. Because you still, I find, you don't have a lot of believers in it. And I mean, over the last 12 months, the Russell's up 43%. Now you could say, well, it was off a low base, whatever, but I mean, year to date, it's up 21%. Like, what more evidence do you need? The Russell's above 3,000 for the first time ever. What more evidence do you need that this is a durable trade, it appears? Or do you not even believe that?
I think it's all just a function of, I'll say this. A lot of people are having trouble beating their index in the small and mid-cap class because there's big names in there that are about to roll out with rebals next week. So a lot of clients are really concerned about or thinking about how to position around SanDisk or Micron or whatever's in their particular index. I think it's working because people are looking for, AI alternatives, honestly. So some of the industrial data looks a little better. Maybe the consumer looks a little better. If gas comes down, they can find some names to own in the small cap space. Everyone I'm talking to is just concerned about, if we do get a sell-off in AI revenue names, are they going to get decimated, or how do they avoid big downside captures? So I think that's part of the answer.